You wake up one morning and check your bank account. Not because something is wrong. Just, out of habit. The number is fine. It's always fine. Enough to cover the bills, maybe a little left over. But somewhere, deep in the back of your mind, there's a quiet voice. Not loud enough to panic you. Just loud enough to make you uncomfortable. It whispers, "Is this it?" You close the app. Make your coffee. Go to work. But the question stays. You are 26, maybe 28. You have a job. You have a routine. You wake up, you trade hours for dollars, you come home, you spend some of those dollars, and then you sleep. And then you do it again. You are not broke. But you are not building anything either. Your checking account has $3,200. Your savings account has $800, which you haven't touched since you opened it 2 years ago because you're saving it for something important. You have a 401k through work that you enrolled in because HR told you to, and you have no idea what it's invested in. You contribute 3% because that's what the form said. You think about investing sometimes. You've seen the TikToks. You've heard the podcasts. You know the word compound interest, but if someone asked you to explain it right now, you'd stumble. You think investing is for people with extra money. And right now, you don't feel like you have extra money. This is level 1. And almost everyone you know is here. Then one afternoon, something small happens. A coworker, someone your age, same salary, same city, casually mentions that their Roth IRA just crossed $14,000. You don't even know what a Roth IRA is. You laugh it off. You say, "Nice." But something shifts inside you. You go home and you Google it. And for the first time, you don't just scroll past the investing content. You actually read it. And here is where the system starts to reveal itself. Because here's what nobody told you, not your parents, not your school, not your job. There is a machine running underneath society. It has been running your entire life. And the people who understand it don't explain it to you. They just use it. The machine is called capital. And it works like this: money, when positioned correctly, earns more money without you doing anything. Time does the work. Compound growth does the work. The asset does the work. You don't. But most people never position their money correctly. They spend it, or they park it in a savings account earning 0.4% interest, while inflation eats 3% of its value every year. They are moving backward and calling it stability. You were moving backward. You just didn't have the numbers to prove it. So you start. You open a Roth IRA. You put in $100 the first month because that's what you can afford. It feels embarrassing. $100 feels like nothing. The market goes up $4 one week and down $7 the next, and you check it every day because you don't understand why it moves. But you keep going. You cut $200 out of your monthly spending, one less dinner out per week, cancel 2 subscriptions you forgot about, stop buying coffee 5 days a week and make it at home 4 of those days. You automate $200 a month into an S&P 500 index fund. You do this for 6 months. You are now at level 2. Level 2 is quiet. Nothing dramatic happens here. Your account grows slowly. You start to understand that the checking is for living, the Roth is for the future, and the 401k is for matching, free money your employer gives you that you were partially leaving on the table. You increase your 401k contribution from 3% to 6% to capture the full employer match. You have $4,800 invested now across different accounts. It doesn't feel like much. But something has changed in how you see things. You start noticing money differently. When you buy something, you don't just think about the price. You think about the opportunity cost. That $60 dinner isn't $60. It's $60 that could have been invested at a time when you're young, which compounds over 30 years into something much larger. You don't stop spending, but you start choosing. And that, the choosing, is the beginning of a different identity. You are 31 now. You have $27,000 invested. You didn't feel yourself cross that number. It crept up on you while you were living your life. You've started reading more. Not financial news. You've realized financial news is mostly noise designed to make you react. You've started reading books. The Intelligent Investor. Per Charlie's Almanac. Letters from Warren Buffett to shareholders that he posts publicly every year, that most people never read. You start to see a pattern. The machine doesn't reward excitement. It rewards patience. It doesn't reward the person who bought the hot stock on a Reddit thread. It rewards the person who bought an index fund in 2009 and didn't touch it for 15 years. You learn what a P ratio is. You learn the difference between a stock and a bond. You learn why diversification isn't about picking more things, it's about managing risk you can't predict. You are at level 3. And here, for the first time, you start to feel the pull of the machine working in your direction. Your net worth crosses $100,000. This number matters more than it sounds. Not because of what it buys you, but because of what it does. At $100,000 invested, compound growth starts to become visible. You are now earning more from your investments in a good year than you contribute manually. The machine is generating momentum on its own. You increase your income. A promotion. A side skill you monetized, consulting, freelance design, something you knew how to do that other people needed. Your income goes from $65,000 to $88,000 in 2 years. And here is the move that most people don't make. You don't increase your lifestyle at the same rate. You keep your rent the same. You don't buy a new car. You increase your investment contributions. The gap between what you earn and what you spend, that gap is where wealth lives. Most people close the gap immediately. Every raise becomes a new expense. Every bonus becomes a vacation. You leave the gap open. You feed the machine. You are 36. You have $340,000 invested across your Roth IRA, your 401k, and a taxable brokerage account you opened 2 years ago. You have started investing in individual stocks, not gambling on trends, but buying ownership in businesses you understand. You hold Apple, not because someone told you to, but because you read their annual report and understood their margin structure. But here is what this level actually feels like from the inside. It is lonely in a way you didn't expect. Your friends are buying boats, upgrading kitchens, taking European vacations and posting every meal. And you are sitting at your kitchen table on a Tuesday night reading a 10K filing for a mid-cap industrial company that nobody at your office has ever heard of. You question yourself sometimes. You wonder if you're being too rigid, too calculated. If you're trading your 30s for a number on a screen that might not even matter the way you think it will. And then the market drops 18% in 3 months. Your portfolio loses $61,000 on paper in 90 days. You feel it in your chest. You check the account more than you should. You read the headlines and every headline says something different, and none of them actually know what's coming next. This is the real test of level 4. Not the math. The psychology. Because the machine doesn't just reward people who understand it intellectually. It rewards people who can hold steady when everything in their body is telling them to run. You don't sell. You actually buy more, $800 extra that month into your index fund because prices are lower and you understand, at a gut level now, not just a theoretical one, that this is how the machine rewards patience. 14 months later, the portfolio is at $390,000. You never forgot what that drop felt like. And you never forgot that you stayed. You are now at level 5. And something quiet but permanent has shifted in your identity. You don't think of yourself as someone who is trying to build wealth anymore. You think of yourself as someone who already has a system. There is a difference. A significant one. The person trying to build wealth is always reacting to the market, to the news, to what their coworker said at lunch. They are emotionally inside the machine, getting pushed around by it. The person with a system is outside it, watching, adjusting only when the rules of the system require adjustment, not when fear or excitement demands it. You automate everything now. Contributions go out the first of every month before you can see them or feel them. You rebalance once a year. You review your tax strategy every December. Everything else is silence. And in that silence, the machine runs. You have also started learning about real estate. Not flipping houses. Not HGTV. The actual mechanism, rental income, depreciation as a tax shield, leverage using a mortgage to control an asset worth 4 times your down payment. You buy a duplex. You live in one unit. You rent the other. The rent covers $900 of your $1,400 mortgage. You are now using someone else's money to build an asset. The machine has a new gear. This is where most people's investing story ends. They max their 401k, maybe own a property, retire at 65 with a comfortable number. And that is a good life. That is more than most people achieve. But the machine doesn't stop there. For some people, it keeps going. And the next level looks nothing like the one before it. You are 42. Your investment portfolio is $1.1 million. Not because of one big win. Because of 15 years of boring, consistent, automated decisions compounding on each other. But at this level, something shifts. The game changes. You start meeting people who don't talk about stocks the way everyone else does. They don't talk about the market at all. They talk about deals. Private placements. LLCs structured to hold real estate across multiple states. Tax strategies that the average CPA doesn't even know about. You learn about cost segregation, a way to accelerate depreciation on real estate to eliminate your taxable income legally. You learn about opportunity zones. You learn about 1031 exchanges that let you sell a property and defer all capital gains taxes indefinitely by rolling into a new property. You realize that the tax code, which most people see as a system that takes money from them, was actually written by people who own assets. It rewards asset owners. The machine was never neutral. It was built to move money toward people who understand it. You are 48. Your net worth is $4.7 million. This number is not the point. The point is what your life looks like now. You don't have a boss. You haven't had one in 6 years. You have income streams, rental properties, dividends, a small business you own equity in, returns from a private fund you were able to access because you crossed the SEC's accredited investor threshold of $1 million net worth. You work when you want to. Not because you're lazy, you actually work more than most people. But the work is chosen. It is not traded for survival. You are no longer selling time. You are deploying capital. The machine works for you now. Fully. And then there's another level. One that most people never see up close. You are at a dinner. Someone introduces you to a man, late 50s, quiet, drives a modest car, wears no logos. He mentions, casually, that he owns a portfolio of commercial real estate worth $220 million. He doesn't talk about the market. He doesn't check his phone for stock prices. He talks about systems. About asset managers. About the cost of capital and how he structures deals so that the risk sits elsewhere while the upside flows toward him. He has a family office, a private firm that manages his wealth the way a corporation manages operations. He has a team, a CFO, an estate attorney, a tax strategist, an investment manager. He pays them to optimize every layer of his financial life. At this level, the machine is not something you feed. It is something you operate. You ask him, when did it change? When did you realize you were playing a different game? He pauses. He says, when I stopped thinking about money as a goal and started thinking about it as a tool. And when I realized that most people never ask whose hands built the tool, or who it was built for. Here is the truth that most people never sit with long enough to feel. The financial system is not broken. It is working exactly as designed. It transfers wealth from people who don't understand how it works to people who do. It is not cruel. It is not personal. It is mechanical. The person who keeps $50,000 in a savings account earning 0.5%, while inflation runs at 3.5%, is not being cheated. They are simply using the machine incorrectly. The person who invests consistently increases income, keeps expenses flat, acquires assets, defers taxes legally, and compounds over decades, the machine serves them. Not because they were lucky. Not because they were born into it. Because they learned the rules of a game that no one teaches in school. And here is where it gets uncomfortable. The game doesn't care about you. Not about your good intentions. Not about how hard you work. Not about how much you deserve it. The machine doesn't measure deserve. It measures behavior, position, time. You can spend 40 years working harder than anyone you know, honest, disciplined, never missing a shift, and still retire with $200,000 in a 401k that your financial advisor manages for a 1% annual fee that has quietly consumed $80,000 of your growth over time. Or you can understand the machine. You don't have to be brilliant. You don't have to be ruthless. You just have to see it clearly. The gap between level 1 and level 10 is not intelligence. It is not luck. It is not even discipline, entirely. It is awareness. The awareness that there is a system. That it follows rules. That the rules can be learned. That the learning takes years, not hours. And that the cost of never learning them is paid slowly, quietly, in a currency most people don't notice until it's too late. Time. The man at the dinner finishes his drink. He mentions he's flying out tomorrow, something about a development deal in Austin and a board meeting in New York. He doesn't say goodbye dramatically. He just leaves. And you sit there. Not inspired. Not motivated. Just clear. Somewhere in your city tonight, there is a 24-year-old. They just got their first paycheck from their first real job. They open their bank app. The number is fine. A little voice is starting to whisper. They close the app. Make coffee. Go to sleep. The machine keeps running. Whether they understand it or not.